Every Bitcoin cycle so far has provided diminishing returns, but is there a chance this bull market could break that trend? So we'll jump right into it here on the BTC growth since cycle lows chart we have here on BitcoinMagazinePro.com. Now, first and foremost, do I believe this cycle will have diminishing returns? Almost certainly yes. Now don't click away. I've got loads of cool stuff that we can look at today that isn't just going to immediately say, let's stop watching the video. Please don't do that. If we go straight to the Bitcoin chart here, what we can see is the previous cycle had around 2014% returns. We can see so far as I film this that Bitcoin's experienced somewhere around 630, 640, or to our current all-time high somewhere around 680% returns. Now if we were to experience 2014% returns, it'd get us to around $330,000 in terms of the BTC price, which I think is a little bit out of reach. And I'll get into why I think that is the case, but why I don't necessarily think that is a bad thing shortly. What we can see though is even if Bitcoin is to experience diminishing returns, it only needs to be slightly less than these 2000% returns. I think it'll actually be a little bit considerably less than that 2000%, but diminishing returns just means less than the previous cycle. It doesn't mean we have to half the previous cycle or only have a tenth of that. We've already broken that. But if we just reach $300,000, technically that would still be diminishing returns. So I don't think there's any reason to be bearish. And if we just go back over here onto Bitcoin Magazine Pro, one of the main reasons that I do think we'll have diminishing returns, because of course we can say that has been the trend historically and that's going to continue, but I'd like to actually find some data to back this up. So if we look at something like the Bitcoin supply adjusted coin days destroyed, it gives us some indication of why I think this is the case, actually backed up by data, not just personal opinion or historical trends. Now what we can see is the supply adjusted coin days destroyed. I'll just give a very quick introduction into what this is. The coin days destroyed is essentially looking at the velocity of Bitcoin movement. So if I held 1 BTC for 100 days before transferring it, that would equal 100 coin days destroyed. Now if I held 0.1 Bitcoin, I'd have to hold it for 1,000 days to equal the same 100 coin days destroyed. So what this does when actually weighting coins by the amount of time they've been held is give us, like I said, some velocity. So those that have been holding Bitcoin for many, many years, and especially those that have been holding a huge amount of Bitcoin, when they transfer it, it gives us a bit more emphasis on some long-term holders taking some profit. Now what we can see historically, we usually have long, smooth upwards moves in the coin days destroyed. And when it's supply adjusted, we're just normalizing this data for the circulating supply of Bitcoin. We usually have these big, smooth moves, whereas in this cycle, we've had 3 distinct peaks so far, and hopefully we'll have a 4th, which is even higher. What we can see is if we just look at the previous cycle as an example, what we can see is as this supply adjusted coin days destroyed bottomed out, the Bitcoin price was somewhere around $9,500. We'll just say $9,000 for simplicity's sake. And when we had this big peak, the Bitcoin price was around $36,000. So the price did about a 4x to get to this level of coin days destroyed, this level of profit taking in the market. Now, if I look to the current cycle that we're in, we can see before the big first major move we had, the Bitcoin price was around $34,000. And then it reached about 65, or on this peak, 68. So that was about 2x. So for the same amount of profit taking, the same amount of supply adjusted coin days destroyed, in the previous cycle we did a 4x, in this cycle we've done a 2x. Now again, if we look at the subsequent peaks we've already seen in this cycle, went from around 62, 68, somewhere around there, $1,000 to around 100 plus $1,000. So they are about a 50% increase. And then in the latest move, again, this was starting from a slightly higher baseline, so maybe not quite as comparable, but from around $93,000 to $117,000. So substantially less percentage moves. So we're not seeing Bitcoin have these massive exponential rallies before people start taking considerable profit, which makes sense. If we look at the Bitcoin volatility, now this is on a 3-month or quarterly basis, we can see that this has been trending very much to the downside, something we covered in our previous video, which if you haven't seen already, I think it was a pretty good one, so I definitely recommend checking that out. But as Bitcoin matures, it makes sense. The asset class is growing. The capital inflows required to massively increase that market cap increase dramatically. So it makes sense that as we mature, we're not going to see as violent moves to the upside or hopefully the downside. But if we just go over to TradingView again here, I don't think this is necessarily a bad thing. What I can see, I've just immediately gone off of TradingView. What I'll look at is this one chart, and then we'll look at it again on TradingView, the golden ratio multiplier. So even though we are having diminishing returns, I still don't think this means that we're not going to have massive returns in this cycle. What we can see is diminishing returns can be mapped out very accurately purely by looking at Bitcoin's price action and technical analysis and some potential maths by looking at the Fibonacci sequence. What we can see is looking at this 350-day or pretty much 1 year moving average multiplied by these Fibonacci sequence numbers, so 21, 13, 8, 5, 3, etc. We're reaching a lower peak every single time. So now I'll go over to TradingView, and if I just hide this and add on the golden ratio multiplier, what we can see is if I just go all the way back, we can see in the first Bitcoin cycle we hit this yellow line, this high 21x average. In the next cycle we hit the lower one, the orange line. In the 2017 cycle we hit the blue line. In the 2021 cycle the orange purple line, sorry, get my colors mixed up here. And then in this cycle we have already reached this red 2x line and this green one before we've currently now consolidated between the 350-day and that 1.6x high. But I do think we can potentially reach this red level once again, just again by looking at the previous instances of diminishing returns in this cycle, and like I said, looking at the habits of profit taking we've already seen so far in this cycle. So usually Bitcoin's in this cycle, when we've had these massive increase in the coin days destroyed, the supply adjusted coin days destroyed, it was first here where we had about 174%, maybe slightly less, as Bitcoin was at around 36, around 100% move in the Bitcoin price before we saw a massive spike in that. And then again, somewhere around here, it was about 100% move in the Bitcoin price action. So if we would see something similar, but already starting maybe slightly higher than that, so maybe not quite as much of a percentage move to the upside, then maybe we could see something like this, a 65-70% move to the upside to reach this upper red line. But remember, these are moving targets. So something that we did similarly in the mathematically predicting the next Bitcoin peak video we did last week, which again, great video, check it out if you haven't already. If we just take the slope of these lines, so the current trend that we're seeing in these lines, and project them out to the end of the year, what we can see is these are currently pointing towards slightly higher prices. Makes sense, they're both trending to the upside. So if we would see Bitcoin move to this green line, it'd result in a 50% move to the upside from where we currently are, and a Bitcoin price around $175,000. Now, if we were to see a move of potentially around 90% up to this red line, which would be in line with the diminishing returns we've seen historically throughout the Bitcoin price cycles, then this would take us to around $220,000, which I think somewhere around there is a fairly reasonable expectation of how high the Bitcoin price action could go in this cycle. But one thing I'd also like to point towards is people may look at diminishing returns and say, well, maybe I need to look to altcoins or more speculative or more volatile assets now that Bitcoin is maturing as an asset. But I don't think this is the case. I mean, a lot of you watching this video, and I can include myself in this, will be probably, let's be honest, overexposed to Bitcoin. But for the traditional investor, seeing this diminishing volatility actually increases their likelihood of exposing themselves to Bitcoin, allocating themselves to Bitcoin. If we look at the Bitcoin Sharpe ratio, we can actually see a recent divergence in this Sharpe ratio when compared to the Dow Jones. So recently the Dow Jones Industrial Index has hit a new all-time high alongside pretty much most US equity indexes, yet its Sharpe ratio has actually decreased compared to Bitcoin. And we're currently seeing the Bitcoin Sharpe ratio over twice that of the Dow Jones Industrial Index. Now, when traditional investors, smart money, institutional investors are looking at what assets to rotate into, if they can see Bitcoin as less of a speculative asset that can have these 80-90% plus drawdown markets, they're way more likely to start allocating 1, 2, 5% of their portfolios to this asset. Now, if I just go back to TradingView here, if we continue to see diminishing returns, which I think is likely this cycle, I would love to be proven wrong and see Bitcoin fast past $330,000. But if we were to see something like 220K, which would be, if I just pull it from the cycle lows here, around 1,300% returns, let's say roughly, and we were to experience somewhere, let's be aggressive, at a 70% drawdown in the next bear cycle, which would take us to somewhere around 65K, which would actually be in line with the all-time high that we set in the 2021 cycle and where we had this big cluster of price action there. And then if we would see once again diminishing returns, this isn't something to be bearish at. We're seeing diminishing volatility, so hopefully we don't see a bear market as low as that. Hopefully we can see some longer lengthening cycles, whether we see this healthy price action that can be sustained a lot longer. But then again, if we see even matched returns of the cycle, assuming we reach 220K, of 1,300%, that'd see Bitcoin at $900,000, which I think is unrealistic. Even if we just half that, 660-ish%, then we're at $500,000 Bitcoin in the next cycle, which I know seems a million miles away. But in the realm of investing, when we're talking in just a few years, a decade or so, potentially seeing an asset do a 5x, that still far outpaces every single asset. And especially when you look to the fact it's doing so with twice the risk-adjusted returns of safe haven and more traditional markets. And I'm not even going to look at altcoins because none of them have outperformed Bitcoin over multiple cycles. Bitcoin still looks to be by far and away the best asset to be potentially over-allocated to for the coming years and decades. Also, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. Make sure to check out all the resources we discussed today, as well as the many more that are all available on bitcoinmagazinepro.com, your number one source for Bitcoin analysis. So just to summarize, this Bitcoin cycle and probably the next few will almost certainly have diminishing returns in terms of price appreciation. We can look to see the habits of profit taking from experienced large long-term holders. They're just selling at lower multiples than they historically have, which makes sense. This is normal to see in an asset which has gone from a few $billion in market cap to now a multi-trillion-dollar market cap. However, this doesn't mean we won't still see massive returns and continue to outperform practically all other markets. We could see, even if we see diminishing returns this cycle and the next cycle, we're still almost certainly going to outperform any other baseline asset. And looking at altcoins or any other markets like that, none of them provide the risk-adjusted returns that we can see in BTC. And the fact that we're not seeing these huge, massive exponential run-ups also likely mean we're not going to see these massive bear markets that are far extending into 80-90% and multi-years long. We're probably going to see diminishing volatility, in both directions, which is going to lead to more institutions feeling comfortable allocating to Bitcoin, which can hopefully lead to these lengthening cycles, which may not be as exponential to the upside, but can hopefully be sustained even longer. But what we can say is that even if we are to experience diminishing returns, looking at something like the golden ratio multiplier indicator, we could still see prices in this bull market very comfortably and easily between $175,000 and $220,000. Of course, this depends on what happens in traditional markets, but we can see, looking at the confluence of macroeconomic conditions, on-chain, derivative, everything's pointing in one direction for Bitcoin, and that's to the upside. If you like this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know in the comments below and on social media, what are your thoughts on Bitcoin experiencing diminishing returns this cycle? And at what price do you think that we may top out? And when do you think we're going to top out this cycle? Because of course, we can map out into the future, looking at averages of moving average slopes and whatnot, but if we're far extending into mid-2026, for example, then that kind of changes the dynamics and how far we're kind of anticipating and extending Bitcoin's price appreciation to the upside. So whatever your thoughts, let me know in the comments below and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.